Welcome to Analysis in Chains with Nathan and Neal. Greetings, my lovelies. Happy Friday. Nathan here. We've got an interesting show for you today. Neal has taken the time to interview Bharath Rao. Bharath is the CEO and founder of Leverj.io. Leverj is a derivatives market for crypto. It stands to reason, if you've been following our show, we've talked about how crypto, how Bitcoin are not quite securities and not quite currencies. They're sort of a mix of both, but they're treated often as securities by people who want to invest. People put in their money, they buy crypto, they expect it to go up, and then they take their money out. So it stands to reason that a hedge fund, a derivatives market, people wanting to bet on the price going up or down would emerge from this. People wanting to hedge. And it's not just for betting, it's all these hedge funds and derivatives are very useful for protecting the value of your cryptocurrency if you've done a token sale yourself. If all of your money is now in Bitcoin, having a hedge so that you can make long-term business plans does make sense. So, without further ado, here's Neal. Now it's time for an Analysis in Chains exclusive interview.
Hi everyone, Neal here. Today I'm meeting with Bharath Rao, CEO of Leverj, who will have their ICO in November. Bharath, thanks for joining me today in this interview. Can you give us a brief introduction about Leverj and how it came about?
Yes. So my background is I'm from the financial industry. I'm also a trader. And as you guys know, the crypto world has been a very interesting space. And you see a lot of innovation in terms of trading and new technology. However, we have always been plagued with exchange failures for various reasons. Some of them are theft, some of them are external hacks, government shutdowns. And a lot of these issues occur because the fact that a small group of people controls a large amount of money belonging to a lot of other people. And this is the sort of all evil in the crypto industry. So whenever there is a whole bunch of money in one space, it becomes a target. So although I've been a trader in the fiat world, I was always hesitant to trade in the crypto world because I did not really have any sort of confidence that my money would be there tomorrow. And when I looked at the different properties of blockchain, as I got a little more into it, I realized it's possible to limit the risk by creating a system where the risks are sort of managed or reduced dramatically. And we actually did create an exchange on Bitcoin, and it's running for about 18 months. But with the Ethereum, we realized that we can make it completely trustless. The issue is that a lot of decentralized exchanges cannot be high performance the way the blockchain is right now. So what we are trying to do is to build a high performance exchange that runs without with decentralized custody. We also are able to do leverage, and we are able to offer futures without having a central exchange user to do any sort of the liquidation and so on. So this is the background and the reason and the product definition of Leverj.
Oh, cool! Sounds awesome. I've been following some of your videos, and one of the things you said that really caught my attention was how a decentralized derivatives market could actually reduce crashes. Could you go into that more in more detail, please?
Yes. So what we have seen historically is that any market that has any sort of derivatives support is usually less volatile. A part of it is that the speculators will go wherever the leverage is the highest. And the second is the very fact that you can hedge risks on large positions enables you to not worry about having to get out quickly. So as an example, let's say I am trading, let's say I am holding a lot of Ethereum because I raised money in an ICO or for any other reasons. If the price of Ethereum were to drop 20%, that may completely destabilize all our plans for the next year. And what that means is that even if it drops to 5%, I will start selling to protect that value so as it won't disrupt my business plans. But if I had a way to hedge that by selling a futures contract, or if there are, say, stop orders, and I could say when it falls below this price, just get into a short futures position, then what happens is I could ride out most of these price movements without having to actually get out of the position, because when large holders of any asset are forced to get out of their position, that destabilizes the market even more. It's like a whole bunch of stuff dumping on the market that has a sort of cascading effect. And what you see is huge crashes and huge rallies in markets that do not have derivatives. Markets that have derivatives are a lot more stable, relatively speaking. And even with Bitcoin, as you may have noticed in the early years, the prices were all over the place. And after the derivatives market became a bit more healthy, we saw that the range of volatility, although it's higher in crypto than fiat, is a lot less compared to, say, 2 years ago.
Wow, that's very interesting. So the fact that we didn't have a Bitcoin crash recently, we can thank you guys, is what you're saying, basically.
Yeah, me and all the traders who are trading and all the other people are all.
Yeah, fantastic. So, because you touched on a few interesting things there. And one thing that really caught my attention when I've been researching a lot about crypto is, and one thing I know about crypto traders in Canada, is that if you were to cash out and convert into fiat, you have to do capital gains on what you got. So are you offering an alternative, which means that people do not need to cash out into fiat but can stay in crypto whenever, as you say, whenever there's like a period of correction, they can stay in crypto rather than having to convert to fiat?
Right. So tax laws differ in every country, so you would have to talk to an actual tax expert. But in general, if you have a position that's a spot position and that you're protecting with the futures contract, you would only, as long as you don't exit your spot position, you would only be paying taxes on any gains on your futures position. So let's say I have let's just pretend some number. Let's say I have 100 million in some spot asset, and I'm very, very cautious of a value change on that. So I buy a short futures position on that asset. If the price goes up and down, so I can ride through it because I know that worst case my futures position is going to hedge all the market impact of whatever is going on. And once the crisis is over, I can close out my futures position. My spot position has not been actually sold, so there has been no capital gain or loss. So it would not be impacted by taxes. However, my futures position, because there are expiries, I would have to pay gains or losses on that, but it will be a lot smaller, hopefully, than the selling of all your holdings. So yeah, you can do some tax planning, but this is something you have to do with consultation with a tax professional who knows about your country's tax laws.
Yeah, for sure. And I think that's a great sign of maturity in the crypto markets, because in the past, I think people's options were very, very limited. It was just a basic buy or sell on the price. But now there's a lot more tools out there that allows people to make more sophisticated bets, which I guess reduces volatility, as you were saying. So this kind of brings me into another feature about Leverj, that I find is quite unique compared to what is out there, and that is your tokens, because you have two tokens. The main one that you're selling on the ICO, which is Lev, and you have Fee, which is a buy token. Can you tell us more about that?
Right. So we have used two-level tokens to separate value and utility. So the Lev token represents value of the entire ecosystem, and the idea is that you're buying into the a license. You're buying a license to trade on the platform, and that sort of enables you to trade up to a certain volume without paying any fees. And the second token is the fee token, is the way to account for your exercise of your license. The idea is that you need the platform will grow, and you need something that grows with it, and that is a primary token. But the interactions of services and the users requires a sort of stable measure of value, and that is what the secondary token is for. And what we do is we enable the owners of Lev to stake the Lev for a duration of time, and based on how much they stake and for how long, fee tokens are generated and distributed to them. So this enables people who, let's say you are going on vacation for a couple of months, you don't want to trade, you can simply use those fee tokens in the future, or you can sell them or anything else you want. If your capacity increases, you can buy more Lev, or if it's temporary, you can buy fee from the other users, and you can start trading. Now, from a user interface perspective, all of this is automated. You will just go to a screen, you'll click buy, you'll click sell, and whatever is cheaper in the market, that will happen for you automatically. So one of the interesting things about our token structure is that it has the additional function of stabilizing the economy of the platform, right? So when the number of transactions increase, there may be upward price pressure on the fee token. So people may simply prefer to pay in Ether, and this brings the price down. And when the volume decreases, the price of fee may go down, and it becomes more attractive to buy it from the market. So this sort of interaction stabilizes the price, and it keeps the ecosystem healthy and predictable.
Wow. So I find this so innovative, but I haven't come from Wall Street or the financial world. Is this something that you've seen before, or is this something that you worked with ConsenSys with? Because I thought that that's an amazing partnership to have.
Right. So ConsenSys is a technical advisor, and although they're only required to do technology, they have helped us in every way possible. It's a very, very solid company. It's a wonderful brand. If you guys get a chance to work with ConsenSys, don't pass it up. It's a fantastic company.
Awesome. Good to know.
So the model of the economic model of the tokens was developed by my team. We have an economist on board, and we looked at all the other models that try to stabilize a price, and they do it sort of by being a central actor. And what happens there is that you need some sort of reserve funds, and these funds can get depleted, and you can fall into an economic crisis. What we wanted to do was not be that force, but let economics dictate it. So if we accept the fee token at a par value, then when the price falls below that, there is already an economic differential that simply makes economic sense to buy it cheaper at the market and have it accepted by the platform at the par value. Whereas if the price goes up, it doesn't make sense to buy it from the market, but actually sell it at the market. So what we do know, there's very little you can predict about crowds, but the one thing you can predict is that they will act in their own economic interest. So using this, we modeled it so that the The services can be priced in a predictable range, and at the same time, the value of the platform, as the platform grows richer, it would have more value. It should cost more for others to enter the platform, and we let the primary token float based on people's perception of the value of holding a license for the platform.
Oh, it's really cool. And one thing that I was wondering when I was seeing this was that with an idea like this, you could have many competitors that could maybe copy you. Do you potentially worry that with so many other blockchains out there, and there are other blockchains like Ethereum that have decentralized apps, do you fear that maybe some competitors could copy your idea and maybe use a different blockchain that has more features than Ethereum? Is this like a major threat for you guys?
Not at all. So I don't believe that anyone who has a business plan of having a unique idea has any major chance of success. Ideas are a dime a dozen. Everyone has their own idea. When I've been in Silicon Valley for a long time, and you try to express your idea, you try to sell your idea, and everyone has their own different idea that they want to sell to you. So ideas are very cheap, and what people copy is not an idea but a successful model, a model that already is proven to be successful. That is what attracts copying. So when you try to copy a model, many times it is by the time you think you can copy it, it is already so successful and has a network effect that it cannot be easily broken. So anywhere where a lot of people come together to interact, there will be a network effect. As an example, Google Plus tried to break Facebook, it couldn't do it. So many other copycats trying to break Twitter, it doesn't happen. When you think about it, Twitter is not really complex. It's 140 characters that are streamed all the time. Yet it's hard to break that monopoly. And I think more important than anything else is that when you look at what we are doing, the expertise behind it, the experience behind understanding what problem to solve itself is it takes a certain amount of depth to understand what is it that needs to be solved. And how to actually implement it is a smaller but important part. And I don't believe people who start now, who have probably not thought of how to do decentralized leverage, how to do high-speed non-custodial trading, if they're going to figure it out now and try to build it, it will, we will always be ahead by 6 months to a year, and we are not stopping. We'll keep adding value, over time, and it would be very hard for them to catch up to us. I'm never afraid of competition. If someone is better than me, they should win. Their platform should win and become the platform of choice. I hope that I'll be able to attract the best people and build the best platform.
Yeah, I think that was an excellent answer. When in terms of copying ideas and coming up with ideas, and how the network effect, as we've seen in recent years, particularly a lot of products and companies coming out of Silicon Valley are protected. Like they have this moat, which is their network effect, and if you're very good at utilizing it and developing it, it can really protect you against competition. So yeah, I think that's an excellent point. So if network effect and your team is that foundation that Leverj is growing from, where do you see Leverj in 5 to 10 years with the growth that you're anticipating?
So my goal is to be a viable and credible alternative to the existing financial system. I think the existing financial system has a lot of drawbacks. It's very expensive, it's inefficient, and parts of it are, I don't want to say corrupt, but they're very unsuitable for the participant. The level of transparency you can have with blockchain, the provable compliance you can have using cryptographic proofs, all of these don't exist in the the fiat world. I want to get to a place where we replace or become at least a credible alternative to the financial system. So that is my goal 5 to 10 years from now, and it seems very ambitious. But if you look at what we were doing 5 years ago, we were buying pizzas with cryptocurrency. That was considered awesome. Now we are doing, we are raising, hundreds of millions in ICOs, and that is only like less than 5 years. 2014 is, when Ethereum came out. It's a technology less than, it's about 3 years old. So can you imagine what will happen in 10 years? The great thing about the crypto revolution compared to the internet revolution and the electronic revolution and everything else is that there is no physical infrastructure that needs to be built. So even with the internet, you had to lay all these pipes and you had to create all this equipment. With crypto, it's pure math, and which is why I think it will be a lot faster as a revolution than any of these other technologies. The only thing that is really retarding the adoption of crypto is the fact that the user experience is a little bit complicated. Ordinary people don't know what a private key is. They don't know that it cannot be reset. They don't know how to protect it. If these problems are solved, I think in 5 to 10 years, it will be a dramatically different world. And crypto will be as big as really the whole fiat world.
Yeah, I think that's a very ambitious thought. And, if you look at the growth rate, there's no reason why it cannot happen. So you touched on something very important that is an issue in the fiat world, which is compliance. And from reading about Leverj, one of the big advantages of crypto, I guess, derivatives markets is that you're using open source technology and you have blockchain and everything is very, very transparent. So if everything's very, very transparent, does that mean we should have something like an SEC in the crypto world that can monitor the technologies in the crypto world that Leverj use? Is it needed or is it already so decentralized and open that we do not need legislative structure like SEC?
So every country has its own approach to compliance, and compliance, let's understand the goal of what regulations and compliance are all about. Compliance is really about regulating other people's money, which means when you take your money and you give it to another institution like a bank or a broker dealer or something like this, that is when it needs regulation. When you own your own money, regulation is neither needed nor possible. So if you build a crypto system where everyone owns their own money and acts independently without going through a third party, not only regulation is not necessary, it's not even possible. You cannot regulate 100 million people or whatever the crypto size will be in 5 years and tell them what they can trade and what they cannot trade. So you can definitely definitely going to have tax consequences. So to give you my understanding of how the regulators look at things is they have two primary goals. The first is they want to ensure orderly execution of the markets and faith in the markets. So the biggest thing that they're trying to address is a huge market crisis, is destabilization, is large-scale fraud and destruction of the whole system, right? That is what they are most concerned about. And this is where blockchain can help, because we can provably prevent a lot of these from happening. We can make sure, for example, people only trade with the money they have, with the everything has the signature of the owner. There are a variety of common sense regulations that we can definitely put as part of the blockchain system, and we have as part of a product. The second thing that the regulators are concerned about is large scale fraud. And large-scale fraud is, as an example, large-scale fraud is what leads to financial meltdowns. So recently, mortgage fraud caused the collapse of the housing market. Savings and loan scandal caused crisis in the banking industry, and that is when regulation comes in, because there is a bunch of people who are controlling the money of many users, and they're doing something with it they should not. So we can prevent a lot of fraud by using digital signatures. Having essentially programmable money solves a lot of these issues. So once most of these things are automated, it is possible, if someone can run this for a while and prove that it works, that countries will create lighter regulatory regimes for blockchain-based financial systems. If there is no possibility of theft, if there is no possibility of large-scale fraud, it may be easier to have a lighter compliance regime, which enables the regulatory agencies to deal with these things more effectively.
Yeah, that is, I can't disagree with what you're saying. That's very, very insightful. So, Bharath, we'll wrap up now. I'd like to thank you very, very much for your time and all your insight. It's actually been incredible. I love reading about the financial industry, but you've given me another level of insight I never had before, so thank you for that. And I'd also like to wish you all the best of luck with your ICO in November. I'm sure it's going to be a huge success, and I cannot wait to follow news on Leverj in the future.
Thank you so much for having me, and hope to talk to you again in the future.
Thank you for listening to this Analysis in Chains exclusive interview. All right, thanks for listening, guys. I hope that you got as much out of that as I did. I always get so much from listening to people who are high up in these innovative blockchain companies, who are the real experts, living and breathing the market. And so thank you, Neal, for taking the time to do the interview, for Bharath for joining us. A couple of housekeeping things. Don't forget that we've got a new Slack group, so you can join it by going to www.analysisinchains.com. We would love to have you on our Slack. Just sign up with the form, and we'll give you 20 nutshells for joining. If you haven't heard this already, nutshells are the official Analysis in Chains crypto token. We put them on the Waves platform. They are non-reissuable. There are only 1 million in existence, and you get a few just for signing up. And we would love to have you on the Slack, because what we've been doing is talking about past shows, questions that come up after the show, further questions people have, as well as talking about topics for future shows that people would want to see. So, come and join us. We'd love to have you. Okay, that's our show. Thank you so much for joining us, and we will join you again on Monday, where we'll have news, look over what's gone on over the weekend, and have a grand old time. That's our show. Thanks for tuning in to Analysis in Chains with Nathan and Neal. Check us out at analysisinchains.com, on iTunes, Podbean, and wherever else you listen to podcasts. Until next time, keep hashing.